So here's something you might not have heard yet. The big plan to stop taxing Social Security benefits, it's officially off the table. Yup, after all the talk, it's not happening. But before you get too disappointed, there's actually some good news. Lawmakers have come up with something else. And believe it or not, it might actually help more people. They're rolling out a $4,000 bonus deduction just for folks 65 and older. That means you could lower your taxable income and possibly pay less in federal taxes, or even nothing at all. Let's break down what's going on and what this new change could mean for you or someone you care about. For the last couple of years, there's been a lot of buzz in Washington about getting rid of federal taxes on Social Security benefits. It sounded great, and honestly, a lot of retirees were counting on it. But then reality hit. Because of the way Congress passes certain laws through something called the reconciliation process, they legally can't include changes to Social Security in those types of bills. It's just not allowed under current rules. So the tax cut plan, it hit a dead end. Lawmakers had to find another way to offer relief to seniors without touching Social Security directly. Instead of removing taxes on benefits, they're boosting the standard deduction for seniors. If you're 65 or older, you already get a little extra on top of the regular deduction, around $1,600. But with this new plan, that's going up to $4,000 per person. And that's in addition to the regular standard deduction, which is about $15,000 if you're single, or $30,000 if you're married. So if you're single, you could now deduct up to $19,000 from your income before taxes even kick in. Married couples, you're looking at more than $34,000 in deductions. That's real money. And for many, it could mean lower taxes or no taxes at all. Here's the thing. The original plan to eliminate Social Security taxes would have helped about 30 million seniors, mainly the ones who are still paying taxes on their benefits. But this new deduction, it's available to everyone 65 and older, whether or not they pay taxes on Social Security. That's over 70 million people who could now qualify. That's a big difference. Let's say you're a single retiree bringing in around $30,000 a year from Social Security, maybe a small pension or part-time work. Right now, the standard deduction takes about $15,000 off the top. That leaves $15,000 subject to tax. But with the new $4,000 bonus, that drops your taxable income to just $11,000. Depending on other deductions you might qualify for, like medical expenses, you could end up owing no tax at all. Now imagine how that plays out across millions of seniors. It's not just numbers, it's actual savings that can make a real difference. There are some income limits though. If you're single and make less than $75,000 a year, or married and together make less than $150,000, then you're in the zone to get the full benefit. If you're above those numbers, the deduction starts to phase out, meaning the more you earn, the less of that $4,000 you'll actually be able to use. This is a really common question. If your income is super low and you don't even need to file a tax return, will this help? Honestly, no. If you're not filing taxes because your income is already below the threshold, then more deductions won't matter. You're already not being taxed. But here's the thing. That could change. If someday you pick up a part-time job, take money from a retirement account, or even sell something big like property, your income might go up enough that you do have to file. And when that happens, knowing about this deduction could save you hundreds, maybe even thousands in taxes. If you're earning well over $75,000 or $150,000 as a couple, this new deduction probably won't make a difference for you. That can feel frustrating, especially if you were hoping for the original tax cut. But the idea here was to help the seniors who need it most, those living on fixed incomes and tighter budgets. If you're in the higher income range, the good news is you probably have other tools, like Roth conversions or charitable deductions, to help manage your taxes more strategically. So let's compare. The original tax cut would have helped around 30 million seniors. This new deduction? It could help over 70 million. Sure, the savings per person might be smaller, but way more people get help. And it works within current legal rules, without touching Social Security itself. It's not flashy, but it's practical. And it's a step in the right direction. Look, taxes aren't always the most exciting topic, but they're important, especially when you're on a fixed income. Every dollar saved helps, and this new deduction could make a big difference for millions of older Americans. So even if you're not seeing the benefit yet, just knowing it's out there and how it works can help you plan smarter. Have questions? Curious how this might apply to you or someone you love? Drop a comment below. You're not alone, and talking it out helps all of us. And if you found this helpful, don't forget to subscribe for more updates that actually make sense. No jargon, no confusion, just clear info to help you stay ahead. Take care, and here's to making the most of every opportunity in retirement.